But let's now talk about how all of these overnight cues really impact our own markets and everything that you should track from an India market standpoint as well. We have Sudarshan joining us now, Vamakshi and Nigel also in just a bit. Guys, a very good morning to both of you. Let me come to you first, Sudarshan. We were just going through the global setup, which definitely doesn't look the best this morning. But take us through everything that we should track because there are a lot of important domestic cues too.
Morning, Pavitra. So we had a sharp recovery yesterday in our market, but we'll have to see if we manage to sustain it, as there are several cues that will have to be factored in today, both on domestic and global fronts. So now let me first talk about the global markets. US equities saw a close with minor cuts. All the three major indices were down 0.3% each, and this after wholesale inflation for the month of February came in higher than expectations at 0.6%, and this led to a rise in US 10-year yield to 4.3%. Another important cue that will be in focus is crude, which has extended gains, and Brent is now at $85 per barrel. Factoring all this, GIFT Nifty is indicating a gap down start. Currently, it's down more than 100 points. Now, coming to our market, for our market on Thursday, it was a sharp recovery, especially in broader markets. Mid-cap index gained 2%, regaining 50% of the losses of Wednesday, and small-cap index was up 4%, regaining almost all the losses of Wednesday, and similar kind of move was seen in other sectoral indices too. BSE SME was up 2% and CPSE was up 2% as well. Benchmark indices too saw a recovery, but it relatively underperformed mid-caps and small-caps. Nifty was up nearly 1%, with support coming in from IT major Infosys. Even Adani Group stocks were amongst top contributors, and the group has regained all the market cap losses that it incurred on Wednesday. On institutional activities, the flow suggests there were no major activities. FIs sold shares of little more than rupees 1,350 crore, and DIs bought shares worth rupees 140 crore. Lastly, the cues to watch. We'll have to see impact of MF stress test. Mutual fund houses have released first set of stress test results. We have India February trade data. Trade deficit is estimated $18 billion against $20 billion in January. SEBI board meet is scheduled today. The regulator is likely to discuss ease of doing business for FPIs, AIFs and PMS, and T+0 settlement might be discussed as well. Keep an eye on HDFC Bank on the back of FTSE inflows. And lastly, keep an eye on oil marketing companies, as these companies have announced a price cut for both petrol and diesel by rupees 2 per litre each, and this has come at a time when crude is at a 5-month high.
All right, so it's definitely going to be a packed day, as we come to a close on this week. Sudarshan, thanks a lot for taking us through all of those cues. Let's also bring Vamakshi in because she's looking at all of the stocks that we should track. Vamakshi will definitely watch the oil companies because, like Sudarshan was mentioning on the back of the news flow that came through, but take us through everything else.
Well, absolutely, Pavitra. Let's first start off with Paytm. It is a CNBC-TV18 News break confirmed. The company has announced that they have been granted an approval to participate in UPI as a third-party application provider. In fact, NPCI says that 4 banks, including Axis Bank, Yes Bank, SBI and HDFC Bank, will be acting as payment system providers, while Yes Bank will also be acting as a merchant acquiring bank for existing and new UPI merchants for Paytm. Eris Life Sciences is the next one in focus. Along with acquisition of Biocon Biologics formulation business, they've also announced that they will be acquiring nearly 19.5% stake in Swiss parenterals for almost 237.5 crores. There are a couple of stocks that will also be in focus on the back of some order wins that came through from Gujarat Urja Vikas Nigam. Integrate gets an order worth almost 97 crores. This is for setting up battery energy storage systems. KPI Green has bagged an order worth almost 50 megawatts for a wind solar hybrid power project. NHPC has received an LOI for 200 megawatt capacity solar power project, which is almost worth 847 crores, while JSW Energy has received an LOI for almost 300 megawatts of solar power capacity. Ashok Leyland, watch out for this one because Creador is expected to invest nearly $50 million for 19.5% stake in Hinduja Tech, which is a wholly owned subsidiary of the company. Navin Fluorine will be investing additional 250 crore in its arm, Navin Fluorine Advanced Sciences Limited, while NCC, the arm, has reached a settlement with Taka India Power. They will be paying them 175 crores in 3 installments. They had in fact provided for nearly 140 crores in its book earlier. Shakti Pumps has gotten an order worth 93 crores from Maharashtra Energy Department Agency. And lastly, RailTel has received a work order worth almost 114 crores.
All right. Thanks a lot, Vamakshi, for filling us in with all of that stock-specific action. We're going to watch for all of these in today's trading session. But finally, it's over to Nigel, who's looking at all of the cues from the futures and options space. Hi, Nigel.
Well, morning, Pavitra. You know, the troika that you all were talking about, whether it was the 10-year bond yields, Brent crude prices, or the dollar index, they have moved actually not in the manner that equity markets would like them to move, because all three of them are stronger overnight, which normally is not a great sign for an emerging market like India. So that's about the global setup. Yesterday, we had a great rally, though. What did the FIs do? Well, in the futures market, that's on the index futures, they added close to 11,000 contracts. And that's the second day running, they're adding close to 11,000 contracts. In terms of a ratio, they added close to 2 shorts for every 1 long position that they added. And that's why in the last 2 sessions, because this kind of short addition that we've seen, the short positioning has moved to around 50,000 contracts. Remember, a few days ago, it was at around 30,000 contracts. That's moved to around 50,000 contracts. As I always say, shorts in the system, not a bad thing. You want them to get added and then hope for some glimmer of good news, which causes a bit of a short covering bounce. The big call that I made yesterday was, I'm expecting the market to rebound from the intraday low. And the key reason was the PCR had come down to the lower end of the band of around 0.65. The reason is that yesterday, in fact, we did see that there was a lot of put writing yet again. So the PCR from 0.65 has gone to around 1.1. When it's at 0.63 odd, we normally see a bit of a bounce. And yesterday, they added around the 22,200 call as well as put. There was a fair bit of action. So if there is writing at both those 2 strikes, and if there is a short straddle going on out there, then you're bracing for that broad 450, 500 point range odd. So let's get to the levels. In the near term, well, you have yesterday's high and low as a reference point. And this high and low, if you pull up the chart, it perfectly ties in with the 20 as well as the 50 DMA on the Nifty itself. Yeah, pat in the middle is where the Nifty is. The Nifty Bank's reference levels as well come up for you in the screen. So we start off in the red. On a closing basis, you don't want to break the 50 DMA both on the Nifty and the Nifty Bank. So that's about trade setup. But Pavitram, it's your last power breakfast here on CNBC-TV18. It's been a pleasure working with you. Pleasure hosting the show with you and always being on your show. Wish you the best as always.
Thank you, Nigel. Power Breakfast was my first show, and it was my first show with you. And for anyone starting out, it makes, the biggest difference who you're anchoring with. So thank you.
More power to you, Pavitra.
Thank you, Nigel. And I'm here for the rest of the day, so I'm sure you're going to, be around and remind me of it multiple times. But